VectorVest is a stock analysis and portfolio management software. We've been around for 30 years. We analyze stocks better than anybody out there for value, for safety, for timing, and we also time the market. For any of those who feel that it's not plausible, that's possible and plausible together. If you don't feel that it's possible to time the market, well, for 30 years we've been timing the market. But when I say we time the market, we don't predict which way the market is going to go. We track the trend of the market and we keep our subscribers on the right side of the trend. That's what timing the market means to us. And that helps you to stay on the right side of the trend of the market at all times. So what we're going to do on the home page, this is what it looks like when you first open up the software. And on this home page, you're going to get a plethora of knowledge to help you to dissect what's really going on in the market to get a better feel on how to, one, invest in stocks, buy stocks, not buy stocks, or how to manage the current positions that you hold. So put all of that together. That's what we're going to do. Plausible is a Glenism. I like that, plausible. It's possible and plausible makes it plausible. And David's not here, but that's a good Glenism. I like that. All right, so with that, let's look at what's going on in the market. If you look at our market timing gauge at the top, our market timing gauge is 2 ticks into the green. The color guard is somewhat bullish. VectorVest does advocate buying safe undervalued stocks that are rising in price at this time. So this is our daily traffic light into the market. And right now it's saying it's okay to buy stocks as long as they're rising in price at the time. Now down below, and you look at the market timing gauge, we've got 2 ticks into the green because on our color guard, the 3 market timing indicators we track, 2 of the 3 are in the green. The 3 indicators that are tracked in the color guard are the price of the VectorVest composite, the relative timing or the short-term price trend of the VectorVest composite, and the BSR or buy-to-sell ratio, which is looking at the overall health of the market. Let's start with the price, and let's move over to VectorVest at a glance. The VectorVest price or the VectorVest composite price is an indexed arithmetic average of all of the stocks that we track in the market. Currently, we're tracking 8,271 stocks. Of those stocks, the average indexed arithmetic average of all of those stocks right now is at $48.69. We feel that this price or this movement is a better representation of broad market movement because it's looking at this many stocks. Now let me move over to our indices. Right now the Dow is up and it's up 251 points. Now we always say that when the Dow is up, the market is up. Well, the Dow only tracks 30 stocks. When we say that the NASDAQ is up, the market is up. The NASDAQ is up almost 0.7% today. While the NASDAQ tracks more stocks than the Dow, it tracks about 4,300 stocks, but it's a very tech-heavy indice. All right? And as a tech-heavy indice, say that 10 times fast, Joey. No? Okay. As a tech-heavy indice, a stock like Apple or Netflix or Google, up or down majorly in a day, can affect the NASDAQ in and of itself. So yes, it tracks more stocks than the Dow, but is very heavily weighted towards tech stocks. We also say when the market is moving up, we look at the S&P 500. Well, the S&P 500 is up about 0.5% today. And even with that up 0.5%, the S&P 500 tracks 500 stocks. More than the Dow, yes, less than the NASDAQ, but only 500 stocks. So when we track the movement of 8,271 stocks, we feel that we have a better representation of the broad market movement, and thus we use it for market timing. So let's go back over to our color guard. The price of the composite, how we get these colors. We got a green light in the color guard price column. Why? Because this indicator rose today on both the week over week and day over day basis. Today it's at $48.68. It's higher than it was a week ago at $48.07, and it's higher than it was yesterday at $48.54. This indicator rose on a week and a day over day basis, so we have a green light. Now the RT, which is the short-term price trend in the market, cast on a scale between 0 and 2. When RT is above the value of 1, the market is considered to be in an uptrend. Below the value of 1, the market is considered to be in a downtrend, and that's because this indicator is cast on a scale between 0 and 2. The higher above 1 it is, the higher or the faster in an uptrend it is. And the more below 1 it is, the faster in a downtrend it is. Currently, it's at 1.00. Well, it's higher on a week-over-week basis from 0.97, but unchanged from yesterday at 1.00 as well. So because it didn't rise on both the week-over-week and day-over-day basis, we assign a yellow tile. The BSR, or buy-to-sell ratio, which looks at the overall health of the market. Every stock in our database gets a buy, a sell, or a hold recommendation every day. We look at the relationship of buy recommendations divided by sell recommendations to get this ratio. Above 1, we have more buys in the system than sells. Because that's happening, the market is showing signs of strength. When it's below the value of 1, we have more sell recommendations in the software than buys, and then the market is showing signs of weakness. We are the only ones that are out there that have a true indicator that looks at the overall health of the market. Above 1, the market's got more buy. In our system, we have more buy recommendations than sells. Below 1, we have more sell recommendations than buys. So given all of that information, we look at the color guard. This is a 6-day snapshot of the color guard, whereas the market timing gauge is only 1 day at a time. That was a show on TV, wasn't it? 1 day at a time? Yep. All right. So looking at this overall over the last 6 days, what's the main color you see in the color guard? Yellow. What does that mean? We got a lot of bullishness in the market, but be careful. Now, the market is giving us the okay to possibly buy stocks, but to do it cautiously. Why? Now let's get into what's moving the market, and we're going to get into our first story. This is out of the Wall Street Journal. All right, let's scroll down a little bit, and this is big. This has been a news-driven market for the longest time, okay? And a lot of it has been dealing around or moving around the U.S.-China trade. We know we have tariffs in place. The tariffs are hurting us. Tariffs are hurting China. I think that right now we're at a point of who's going to blink first. And right now, China and the U.S. are trying to come back to the table to talk about these tariffs, but this is big. U.S.-China to remove tariffs bit by bit if partial deal clinched, says Beijing. And if the tariffs can be backed off, that's going to be huge for the market and pushing it up. Not only is it going to be pushing it up, it's pushing it up at the right time. Of what? We have an upcoming election, presidential election, next year. By this time next year, oh yeah, we'll have a new president, or we'll have a returning president, one of the two. So just keep that in mind. Thank you, Claude. I appreciate that. Keep that in mind. So this, in and of itself, is enough to keep the market moving higher. And we're going to take a look at the VectorVest composite on the graph, but this is what's being used to help to push the market higher. Beijing usually doesn't describe how much progress has been made on trade talks, but officials depict a phasing out of tariffs as a hard-won result. I don't need to look much about the story. I really don't. That in and of itself is enough of the story to give an understanding of why the market is moving in the direction that it is. So when we look at what's moving the market, we look at two ticker symbols. One is the VVC, or the VectorVest composite, of which I talked about just a moment ago, and we look at the spiders, because the S&P 500 is what most people look at to decide whether they're beating the market or not. So let's go take a look at those two stocks. Let's go in my watch list of stocks. All right, here's my watch list of all of the stocks that we're going to talk about today. I'm going to highlight the VVC, and I'm going to highlight the spiders. Those are the two that we use specifically for gauging what's going on in the market. The spiders is an ETF, so our main indicators, RV and RS, our fundamental indicators, will pop up as ones on an ETF because it's hard to track relative value and relative safety on an ETF. But for those of you who are new, RV looks at a stock's long-term price appreciation potential. Its potential long-term as compared to a AAA corporate bond. You know that when you buy a bond, after it matures, you get your money back and a little interest. Well, when I look at a stock, I can see if it's worth it for me to own that stock long-term or the AAA corporate bond. Again, it's at 1. Relative safety, an indicator of risk for the stock. Relative safety looks at the consistency and predictability of a company's financial performance. Layman's term, does the stock make money quarter over quarter, year over year? Stocks that have high relative safeties are stocks that consistently meet or exceed earnings. Now, these two indicators, that RV and RS, are both cast on a scale between 0 and 2. Above 1 is favorable, below 1 is unfavorable. Our next three indicators, RT, looks at the short-term price trend of the stock. Is the stock in an uptrend or not? Above 1, the stock's in an uptrend. Below 1, the stock's not in an uptrend, or it's in a downtrend. Also cast on a scale between 0 and 2. Our master indicator, VST, stands for value, safety, and timing. See? Relative value, relative safety, relative timing, all matched up into one indicator. And this is our master indicator for ranking stocks whenever you're looking at a group of stocks. So when you're looking at a list in VectorVest, it's not about just a list. It's about a list that will show you the stocks that have the best combination of value and safety timing at the top of the list, sorted all the way down. That is the power of using, that's one of the many points of power of using the VectorVest software. And then the last indicator cast on a scale between 0 and 2 is CI, or Comfort Index. Well, its name says a lot. It's your comfort level of being able to feel comfortable being in that stock. CI looks at the stock's ability to withstand long and lengthy price declines on an individual stock. Every stock goes up and down. But stocks that are high in CI, that should be a drink, high CI. It's high C, but high CI. Anyway, it should be a drink. Hi, I'm drinking high CI. Go, 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 go. Woo! Anyway, CI is that comfort index that looks at the stock's ability to withstand long and lengthy price declines. Stocks that have high CI are stocks that when they pull back, they have the resiliency to rebound and come up faster than most other stocks. So this is also an important indicator. So the spiders right now have an RT of 1.2. So the SPY or the S&P 500 is in an uptrend as an indice. The VectorVest composite has an RT at 1. The VectorVest composite is getting to a point where it's moving into an uptrend, but not quite there yet. All right, the relative value on the composite is at 0.91, below the value of 1, unfavorable. The safety on the VectorVest composite, 0.86, below the value of 1, unfavorable. But this is positive. I like that the timing of the VectorVest composite is getting to a point where it's almost in an uptrend. All right, let's take a look at these two stocks on a graph. Move that over. There we go. The VectorVest composite. So now, with the story going on with the tariffs, the movement of over close to 8,300 stocks, this is that movement shown in candlesticks. Also on this graph, I have a 20-day exponential moving average. Above the moving average, favorable. Below the moving average, you probably need to be out of the stock. Look at the earnings. Earnings is the engine that makes a stock or a market go higher. Look at the earnings per share forecasted over the last year. Man, definitely in an uptrend. This kind of news about the tariffs is definitely affecting the market as a whole to the upside. Let's move over to the S&P. Same kind of scenario. Above the 20-day exponential moving average. No earnings on it. Why? Because it is an ETF. I do like the volume on it, for the most part, moving up. Right now, over the last few days, though, as the market or the SPY or the spiders have been going up, watch the volume. It's telling me that less people are jumping on board in the market. Just be careful with it. It could be a foresign of what could come. Look here. See when the market, here it is, when the market's moving up, and then when it starts to pull down, sometimes it takes some time before it hits, but look at that. Look at that pullback as it happens. All right, so right now, what's going on in the market with the China, U.S. trade talks, definitely moving the market higher. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.